Yo, welcome to the classroom, guys. And I'm your teacher, Jay from the A. Look, I'm back, man. How credit works in 2025, guys. I will be teaching you the basics of credit, man. Just breaking it down step by step, guys. Because I want my people to know this and learn this. So, how credit works in 2025. Let's get into it. There are 5 parts of a credit score, guys. 5 major parts of a credit score, guys. Look, your first one is going to be your payment history. You know what I'm saying? Your first one is going to be your payment history, guys. The second one is going to be your utilization. Utilization, guys. I'm breaking this down to y'all, guys. Third one is credit age. You know what I'm saying? Credit age, guys. The fourth one is credit mix. And the last one, but not least, inquiries. You know what I'm saying? But we're gonna break down each of these sections and why they are very important. You know what I'm saying? And look, I want y'all to know that, guys, the payment history make up 35% of your credit report. That's majority of your credit report, guys. 35% of your credit report. So one late payment can drop your credit report 100 to 150 points. You never know. You know what I'm saying? Your utilization, that make up 30% of your credit report. That's a big difference too. You know what I'm saying? So stay on top of the utilization. Credit age. Your credit age makes up 15% of your credit report, guys. 15%. That's it plays a big factor as well. You know what I'm saying? 15% is a big factor as well, guys. You know what I'm saying? Credit mix. Guys, your credit mix take up 10% of your credit report. That's guys, that involves accounts, security cards, credit builders, guys. Just a mix of accounts, stuff like that. Inquiries. Those are when the dealerships, the banks pull your credit report, guys. You know what I'm saying? When you go buy a car, the dealership want to run your credit 10 to 15 times. You know what I'm saying? But those are the 5 key components to your credit score, guys. And we're going to break them down one by one, though. First one is your payment history, guys. And this is very important because this makes up 35% of your credit report. This is the most important factor in your credit report, guys. The most important. You feel me? Look, pay your credit cards on time. Pay your credit cards on time, guys, because this is very key. This builds trust with the banks, guys. This builds relationships, guys. This you can be able to get higher limits on your credit cards, guys, just by building trust. Paying your cards sometimes, paying them down on time. You know what I'm saying? Late payments, guys, kills you long term. It kills you in the long term, guys. It's killing us. You know what I'm saying? Look, payment history, guys, is the #1 factor in your credit score. It makes up 35%, guys. That means just paying your bills on time every month has the biggest impact in your credit report, guys. Paying your bills on time impacts your credit report the most. Paying your bills on time, guys, impacts your credit report the most. Even one late payment can stay on your credit report for years, and drag your scores down 100, 200 points, guys. This is really going on. So look, if you don't do anything else, guys, focus on paying them credit cards on time every month, because this is what's going to be key in keeping your credit scores up, guys. Because like I told you, one late payment could hurt you. It could hurt you. It could kill you. You know what I'm saying? So look, if you don't do anything else, man, pay them credit cards on time, man. Just pay them on time, man. It don't matter if you pay a little bit at a time. Just pay them on time, because one late payment, it could kill you. But yeah, late payment history make up 35% of your credit report, guys. Next one is your utilization. Let's talk about it. Guys. Utilization. This is very key too. Look, I always tell my students, my clients, it's best to keep that utilization under 10%. 10%, guys. But you can give it a little breathing room. Keeping those balances under 30% is okay, but I would prefer 10%. Keep those balances lower than 10%, guys. For example, let's just do an example, right? Let's just say I go apply for a card through Navy Federal, right? And they give me $1,000 limit card. Okay, me realistically, right? I'm going to tell myself, okay, I'm going to take this card, right? And I'm not going to go over 10% utilization. So the most I'm going to spend on this card is $100. That's 10% of 1,000, right? So the most I'm going to spend on this card is $100, and I'm not going to go over $100. I'm not. You feel me? Only if I have to, but I'm not trying to. So the best thing to do is keep that card under 10%, guys, because it keeps their utilization low. You know what I'm saying? And look, if you got $1,000 credit card or credit limit, right, and you're using 500 of that card, guys, that's 50% utilization, right? That's over half of that card. You know what I'm saying? So look, the goal is to always keep it under 30%, but the sweet spot is 10%. That's my spot. 10% is the sweet spot, but that's my spot. Keep those cards lower than 10%, guys. Number 3, credit age. Credit age, guys. Look, credit age make up 15% of your credit report, guys. 15%. Look, this includes old accounts, strong accounts. You feel me? No, take that back. Guys, this includes older accounts with a stronger core. You feel me? So the longer your accounts are, the better their age is. The better your age will be. Because, okay, let's say you got a card from 2019. Or no, it's 2025. So you got a card from 2015, right? And you still got that card right now. So if that card is still open from 2015, you have 10 years of age on your credit from that card, just from that card alone. You know what I'm saying? That's a pretty decent amount of age. You know what I'm saying? Look, don't close old cards. Look, please do not close those cards, man. Keep them, pay them down, man. Put them in the wallet, tuck them. Man, I'm telling you guys, that credit age, man, it makes up 15% of your credit report. Look, new accounts lower your average age. New accounts lower your average age. So it's best to keep all of those old accounts going, old cards, guys, going. Look, credit age is all about how long you've been using credit. The older your accounts, the stronger your history looks, guys. The older your account, the stronger your history looks. You know what I'm saying? That's why you never want to close your oldest credit card. You never want to close your oldest credit card, guys. Never. You feel me? It's not good to close your old credit cards. You know what I'm saying? It shortens your average age and lowers your scores. It shortens your average age and lowers your credit scores, guys. Opening new accounts can also bring the average amount down temporarily as well. So keep that in mind. You know what I'm saying? But guys, keep those cards, man. Just keep them, man. Tuck them. Put them in your wallet and tuck them. You know what I'm saying? Because the credit age make up 15%, guys. Next one. Number 4, credit mix. Credit mix make up 10% of your credit report. 10%. You remember I was telling you about the utilization. Keep your credit cards under 10%. Now we're talking about the credit mix now. So look, your credit mix make up 10% of your credit report, guys. Look, this includes different accounts, guys. Different accounts help credit cards. You know what I'm saying? Guys, you got different accounts. You got different accounts like credit cards, loans, installment loans, credit builders. You know what I'm saying? Look, this shows you can handle a variety of different accounts. You know what I'm saying? But look, guys, the credit mix is only 10% of your score. The credit mix is only 10% of your score, guys. But it still matters. It still matters. Lenders want to see that you can manage different types of credit. You know what I'm saying? Lenders want to see that you can manage 2-3 different credit cards, 2-3 installment loans. You know what I'm saying? Lenders want to actually see this, guys. So having a credit card, maybe a car loan later, a mortgage, or I'll show that you can handle a different variety of things. You know what I'm saying? So it's not the most important piece, but it helps round out your profile. You know what I'm saying? It helps round out your profile, guys. But yeah, credit mix, man, 10%. Last one, guys. Last one, inquiries. Inquiries make up 10% of your credit report, guys. 10% of your credit report, guys. Hard inquiries. Temporary drops. Too many hard inquiries can risk red flags. Too many, guys. You can't have too many hard inquiries. Get those hard inquiries removed. Do not let the banks run your credit report 50, 60 times, guys. That's how you get hard inquiries on your credit. That make up 10% of your credit report as well. Look, space out those credit applications. Don't put that many applications in, guys. Look, your inquiries make up at least 10% of your credit report. A hard inquiry happens when you apply for new credit. 1 or 2 won't kill your score. 1 or 2 won't kill your score, guys. But if you apply for 5 or 6 at a time, lenders see that you are desperate for credit, and that's a red flag. Once a lender starts seeing that you're desperate for credit, that's a big red flag, guys. Look, the key is to space out your applications. Be strategic and not random, guys. Be strategic, guys. Yes, Sirski. But yeah, that's the 5th one, guys. And action steps, guys. So look, I'm going to basically tell you step by step basically how to go over your credit report. Look, you know what I'm saying? So first thing we're gonna do, we're gonna pull your credit report, guys. We're gonna pull your credit report at annualcreditreport.com so you can actually know what's on there. You know what I'm saying? How many inquiries you got, how many accounts you got, how many installment loans, how many collections you got. You know what I'm saying? Look, check your utilization. Look at your balances compared to your limits and see where you start. No, and see where you stand. You know what I'm saying, guys? Check your utilization. Look at your balances compared to your limits and see where you stand. Pay all bills on time, guys. You know what I'm saying? That's number 3. Pay all bills on time. Set those bills up on auto pay if you struggle with remembering them. Auto pay is good. You know what I'm saying? Number 4, guys. And if you're just starting out or rebuilding, consider getting a secured card. One of the fastest ways to start building positive history, a secured card. You'll have to put your money up front first, but it's okay to put your money up front first because you're building that relationship with the bank. So, for example, you can go get a Discovery secured card. Put your $200 up front first. They're going to put their $200 on the secured card, turn it into credit, and give you the secured card. Now you have $200 in credit. You feel me? So all you have to do is build off of it. Build up, pay it back on time. Use 10%, $20. You know what I'm saying? Pay it back on time. That's it, every month. Pay it back on time, guys. And if you just do these 4 things, you already be ahead of 90% of people still out there. You will be ahead of the 90% of the people still out there just by doing those 4 steps, guys. Stay on top of those credit scores, man. Stay on top of them. And look, your credit score doesn't define your future, guys. It reflects your past. Start changing it today. Start changing it right now today. Your credit score doesn't define your future, guys. It reflects your past. Start changing it today. Start changing today. Again, your credit doesn't define. Allah. I'm talking. Your credit doesn't define your future. It reflects your past. Start changing it right now today, guys. Let's do it. Look, you are not stuck with a bad credit score forever. You know what I'm saying? Look, guys, I've helped people go from the 500s to the 700s. Easy, guys. I've helped people go from the 500s to the 700s. So many people. It's crazy. You know what I'm saying? It's crazy, bro. But look, I've rebuilt my own life too. You know what I'm saying? I've rebuilt my own life too, guys. You know what I'm saying? The key is to start today. Don't wait for the perfect moment. Every small step adds up. Every small step adds up, guys. I'm telling you, man. Look, subscribe to the Credit Plug, man. J from the A, because I'm back teaching, man. I'm teaching the game. I'm teaching right here on my YouTube channel, man. Make sure you go like, subscribe, man. Follow, hit that share button. Go follow all my platforms. And look, go even join my community, guys. Join the community. I dropped my link right there. Go join my group, free group, guys. Right now I have over 1.4K members in there. Go join the best group selling, man. The best group teaching financial literacy, man. And follow all platforms, man. At J from the A.